Today's hearing is entitled Flood Insurance Reform, FEMA's Perspective. Without objection, the chair is authorized to declare a recess of the subcommittee at any time. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record. Without objection, members of the full committee who are not members of this subcommittee may participate in today's hearing for the purpose of making an opening statement and questioning our witness. The chair now recognizes himself for 3 minutes for an opening statement. As I said at our first hearing last month, this subcommittee has a full agenda this year. Our top priority is a timely reauthorization of the National Flood Insurance Program and its key authorities, which are set to expire on September 30th. Over the past few weeks, my staff and I have taken over 50 meetings with stakeholders, on top of the multiple meetings that were taken by Chairman Luetkemeyer in the last Congress. On Monday, I had the opportunity to visit Louisiana with our Majority Whip, Steve Scalise, where I visited local parish leaders, levy district representatives, bankers, retailers, home builders, and many others. I also toured the southern part of the state, which was devastated, as we know, by Hurricane Katrina, where 1,800 people lost their lives. The NFIP is critical to many Americans. Over and over again, some of the same things continue to emerge in the meetings that I hold. First, a lapse in the program would be irresponsible and would be damaging to communities. Second, policies must be accessible and affordable for those who are in need. Third, there's a strong interest in the growth of a robust private market that can offer consumers choice in flood insurance. Fourth, communities are frustrated by the accuracy of FEMA's flood maps and the amount of time it takes for maps to be approved. Fifth, we should explore new options for mitigation and community resiliency. Sixth, the financial integrity of the program is weak. Today, the NFIP is more than $24.6 billion in debt and runs an annual deficit of $1.5 billion. This is absolutely unsustainable. And finally, we must address some of the egregious claims processing problems that the Northeast in particular experienced during Superstorm Sandy. I'm grateful that Mr. MacArthur, Mr. King, Mr. Zeldin, Ms. Velazquez, the input they've given us as we've gone through this process and taken their input on behalf of their constituents. So I look forward to a robust discussion with Mr. Wright this morning about FEMA's perspective on these issues and others as we ready legislation for reauthorization of this program, which is so important to millions of Americans. With that, I now recognize the gentleman from Missouri, Mr. Cleaver, the ranking member, for 5 minutes.
Thank you, Mr. Chairman. And thank you, Mr. Wright, for being here today. Over the past few years, this subcommittee has held a number of hearings to assess the National Flood Insurance Program, NFIP, and discuss the program's reauthorization. And as we all know, authorization for the program will expire on September 30th, 2017. Should the program expire without reauthorization, no new flood insurance contracts will be able to be extended. That means that the home buyers will not be able to obtain mortgages and close on their homes in flood hazard areas. Additionally, the NFIP's ability to borrow from the Treasury will be drastically reduced. Given the importance of the NFIP to our constituents, it is absolutely critical that this committee work together to reauthorize the program before the September deadline. The NFIP was created in 1968 to provide flood coverage to consumers who were unable to obtain coverage from the limited private market. The NFIP is funding primarily through premiums and fees from policyholders, and a portion of the premiums is used to fund mapping and mitigation activities. Currently, the program covers about 5 million homes nationwide for a total of $1 trillion in flood insurance coverage. It is important to reiterate that the threat of flooding impacts all of our communities, from coastal regions in Florida to parts of Texas and New York, and even to my own state of Missouri. There are over 200,000 Missourians who live in areas where flooding is a risk. As options for reauthorization are discussed, we need to work to ensure that flood insurance remains affordable to our constituents, and to this end, it is essential that FEMA completes the affordable framework that was mandated by Homeowner Flood Insurance Affordability Act. Additionally, It is important for us to continue exploring the best methods for keeping our flood maps updated and to provide sufficient funding for the process. Mitigation is key to the preventing flood damage, and I'm eager to further assess how best to improve those efforts. Lastly, as we move forward in this legislative process, we need to assess the current role of the private market and the role that it plays in our future. And Mr. Chairman, with that, I yield to the ranking member of the committee.
Thank you, Mr. Chairman. Reauthorization of the National Flood Insurance Program is critical. Our housing market has struggled in the past as Congress continued to extend the NFIP for months at a time. These short-term extensions sometimes led to lapses in the program's authorization, which caused instability, wreaked havoc on our housing market, and placed communities at risk. That's why I worked with Ms. Biggert on what ultimately became the Biggert-Waters Act to put forward a bipartisan, long-term reauthorization. We accomplished a lot of good things in the Biggert-Waters Act, but what I will never forget are the unintended consequences of the rate increases that caused great concern for homeowners, businesses, and renters across the country. In response, I worked tirelessly with my colleagues across the aisle to enact much-needed rate relief for thousands of homeowners and put FEMA back on the path to addressing affordability issues. Let's continue in that bipartisan spirit to ensure that the NFIP remains able to provide affordable flood insurance. The affordability challenges are great, but the risk of failing to protect homes and businesses in the face of catastrophe are greater. Congress must address the $24.6 billion debt the program has accumulated, responding to catastrophic storms like Hurricane Katrina and Superstorm Sandy. I will continue to call for the cancellation of this enormous burden that has already cost the NFIP nearly $4 billion in interest alone. Mr. Chairman, as we move forward, we should remember that in the past 5 years, Congress has made sweeping reforms to nearly every aspect of the flood insurance process. In our efforts to quickly move a reauthorization, let us not repeat the mistakes of the past when we may have acted with good intentions, but due to unintended consequences, ended up with bad outcomes for families and businesses. I yield back the balance of my time.
The gentlelady yields back. The chair now recognizes the vice chair of the committee, the gentleman from Florida who has done a lot of work on flood insurance on this committee and in his prior life legislature in Florida. The gentleman is recognized for 5 minutes, or for 2 minutes.
Thank you, Mr. Chairman. I want to thank our distinguished guest, Mr. Roy Wright, for being here to discuss FEMA's perspective on flood insurance reform. You know, the NFIP is something that we have a responsibility to reauthorize in a very brief period of time, as was pointed out by my colleagues. The fact is the NFIP is in need of significant reforms. Floods are a costly and deadly peril, and as has been pointed out, the NFIP has an outstanding debt of $24.6 billion. We must thoroughly consider reforms to protect taxpayers and improve the program now and for the future. Ultimately, when I consider reforms for the NFIP, I also do with my Florida homeowners in mind. I'm committed to ensuring that Florida homeowners have uninterrupted access to affordable and comprehensive flood insurance policies. As such, my priorities for reauthorizing the NFIP are as follows. First, Floridians and all Americans across the country would greatly benefit from more choices when it comes to flood insurance policies, and private competition in this market will lead to greater innovation and more affordable and comprehensive policies for consumers. We must enact reforms that remove regulatory barriers and allow for the development of a private flood insurance market. Yesterday, I reintroduced my bipartisan legislation that passed the House last session by a vote of 419 to nothing. This bill will do just that with regard to competition and consumer choice. Second, we must place the NFIP on sound fiscal footing and ensure that there is no lapse in authorization of the program that would create an interruption to the real estate markets. Third, we must recognize the importance of mitigation and reducing the risk exposures for floods and other disasters. Our witness today has testified that for every $1 of investment in mitigation, communities see a savings of $4 in disaster relief. The importance of mitigation cannot be understated or overlooked. I look forward to working with my colleagues to addressing these and other important issues related to the reauthorization and reform of the NFIP. I thank the Chairman again for calling this hearing, and I yield back the balance of my time.
The gentleman yields back the balance of his time. We now welcome our witness, Mr. Roy Wright, who serves as FEMA's Deputy Associate Administrator for Insurance and Mitigation. In that capacity, Mr. Wright directs the National Flood Insurance Program, the Mitigation and Resiliency Programs under FEMA Stafford Act authorities, the National Earthquake Hazard Reduction Program, and the National Dam Safety Program. Mr. Wright will now be recognized for 5 minutes to give an oral presentation of his testimony. Without objection, the witness's written statement will be made part of the record following his oral remarks. Once the witness has finished presenting his testimony, each member of the subcommittee will be given 5 minutes within which to ask questions of our witness. On your table, as you know, Mr. Wright, you have 3 lights. Yellow or green means go, yellow means you have a minute left, and red means your time is up. The microphone is sensitive. Please make sure you're speaking directly into it and it's on as you give your testimony and answer questions. With that, Mr. Wright, you're now recognized for 5 minutes.
Good morning, Chairman Duffy, Mr. Henserling, Ranking Member Cleavers, Ms. Waters, and other members of the subcommittee. Thank you for the opportunity to testify today. I want to discuss 4 core principles for reauthorization with you this morning. 1, we need an on-time multi-year reauthorization. Secondly, we need to increase flood insurance coverage across the nation through both the expansion of private flood insurance markets as well as the National Flood Insurance Program. Third, we need to address barriers to meeting the needs and demands of our customers. And fourth, we need to bring transparency to the financial framework of the National Flood Insurance Program. Flooding is the most frequent and expensive disaster in the United States. 90% of natural disasters in the U.S. involve a flood. 22,235 communities across the nation rely on the National Flood Insurance Program. That represents 98% of the nation's population. We work with 73 private insurance companies who participate with FEMA in delivering these policies to our 5.1 million policyholders. So let's look with some perspective over the last couple of decades. Due to the nature of flooding, impacts can vary significantly each year. After 15 years of lower than expected damages, Hurricanes Katrina, Rita, Wilma all hit the nation in 2005. These 3 catastrophic events resulted in NFIP claims that totaled 8 times the size of any prior year in the program's history. Rather than directly providing the funds to meet these requirements, Congress directed the NFIP to pay for catastrophic losses through funds borrowed from the Treasury. Paying the insured losses in 2005 required the NFIP to borrow $17.5 billion. In 2012, Hurricane Sandy hit the East Coast and resulted in more than 144,000 NFIP claims. The program paid out an initial $8.4 billion to policyholders. With the corrective actions that FEMA has taken, the NFIP has since paid out an additional $350 million. Since Hurricane Sandy, FEMA has been transforming the NFIP customer experience and been improving our oversight and engagement with the Write Your Own companies. Using our own authorities, we have implemented a new appeals process. We have improved the oversight of the Write Your Own companies with a special attention to litigation. We must streamline the process for making regular changes to the relationships with the private sector partners, and we have begun to modernize the product to better provide the coverages that policyholders want and expect. The NFIP has also implemented changes to be more proactive in disaster readiness and response. I think 2016 is a case in point. We began issuing advance payments to policyholders up to $10,000 while their full claim was processed. We increased coordination with state insurance commissioners. We deployed our insurance staff directly downrange in the field, and we had far more proactive communication with policyholders and the companies. I would assert that FEMA's performance in 2016 demonstrates the corrective progress we've made. While there was no single catastrophic disaster in 2016, multiple events in Louisiana, Texas, and several other states involved in Hurricane Matthew all resulted in the 3rd largest claims payout in the NFIP history, with incurred losses of more than $4 billion. So, to the reauthorization. The core principles. It has been said by numerous people today, and I would wholly agree. The NFIP needs an on-time, multi-year reauthorization. The stability of the real estate and mortgage markets depend on this. Secondly, the reauthorization should recognize the need to increase flood insurance coverage across the nation in both high and moderate risk areas. FEMA recognizes that there's a growing interest by private insurers to offer flood insurance protection. FEMA supports this because an insured survivor, whether they get their coverages on the private market or through the NFIP, will recover more quickly and more fully. To these ends, we must realize that it will take time for the private market to adapt to the market currently served by a public program. And if the private market were to glean only the lower risk policies, the NFIP would be left with all of the high risk policies. This could lower NFIP premium revenue while increasing potential claims payout. Such action would leave the program with even more financial risk, with greater reliance on taxpayers and the Treasury each and every year. As we look forward, a number of opportunities should be explored. Congress could identify a future point in time by which flood policies for all new construction would be provided solely by the private market. When coupled with ongoing floodplain management and building code enforcement, these new residential structures would be built to insurable levels for risk to the private market. Third, we need to remove barriers to providing policyholders the coverages they want and need. And finally, we will all be better off in the future discussions relating to the National Flood Insurance Program when the program has a sound financial framework. We need to price the risk and make it plain, whether this is done by increasing premiums, reducing risk through mitigation grants, or by discounts directed by Congress. The fiscal solvency of the program depends on it. I appreciate the time to be with you this morning, and I look forward to the conversation. Mr. Chairman.
Thank you, Mr. Wright. The chair now recognizes himself for 5 minutes to ask questions. Mr. Wright, my staff reached out to yours in regard to data in regard to compliance rates for mandatory purchase properties. We've heard a lot of conversation as I've talked to a lot of stakeholders that there's a low take-up rate. You've indicated to me that you don't have data on that front. We actually reached out to the OCC, who also said we don't have data on that front. However, earlier this week, our staff was provided a copy of the following slide, if we could put the slide up, from a FEMA-developed presentation entitled State of the NFIP that says there is a significant amount of non-compliance, 53% of policies. I would just note, being a guy from Wisconsin, we're one of the best of the worst states on that front. Duly noted. Do you stand by this data? My question is, I keep hearing this. I'm going, where is this data coming from? That's a real issue in regard to the program.
So there's a set of studies that have been out there. We've cited them. As you look nationally, I've heard a third. We can look at the half in terms of these concentrated states. Under the National Flood Insurance Act, mandatory purchase is not a responsibility of the National Flood Insurance Program at FEMA. I can use the data that is there. What I will tell you is it is very difficult to fully understand a couple pieces of the market. I was shown some data 2 weeks ago. 39% of real estate transactions in 2016 were cash transactions. And so when we start looking at the way that would play, those folks would not be having a federally backed mortgage. That said, more people clearly need to be covered. There are structures at risk that do not have the insurance they need, and collectively, whether that's through us or through the lending regulators, we need to redouble our efforts to see that improve.
I want to be clear. This is a FEMA document, right?
Yes, sir.
FEMA in the bottom left corner. Do you stand by these numbers? Is this a problem?
I acknowledge it as a problem and is the best numbers that I have available to me today, yes.
Okay. Let's move on the NFIP debt and future costs. So under Grim Waters and Bigger Waters, there's a requirement that FEMA put a plan together to pay back the billions of dollars the NFIP owes the American taxpayer. You're tasked in putting together a plan. Have you put together a plan to pay back the American taxpayer?
So we have developed the required plans related to when we borrow. To be very plain, given the discounts related to subsidies and grandfathering that are in place today, there's not a practical way for us to repay this debt.
So we don't have a plan to pay it back.
Based on the discounts and subsidies that I've been directed under the National Flood Insurance Act to implement, which are the constraints I've got to follow with the laws, I don't have an ability to do so.
Is it possible that you put together a plan that says, okay, I'm gonna make a recommendation to Congress that goes, if you want to pay this back, this is what you have to do on a policy front to actually allow me to be in a situation where this debt can be paid down or brought to zero?
So it would require a exponential move in the policy premiums or reserve allocations in order for us to be able to pay the normal year claims, deal with the mid and larger events that are prospectively coming, and deal with the $24.6 billion. The $24.5 billion that is there, I can attribute to the grandfathering and discounts that we've been directed to implement.
Quickly, I want to move to reinsurance. Obviously, we now have purchased reinsurance through the NFIP. Any plans to have further purchases of reinsurance to offload some of our risk?
So absolutely, and I've collaborated with a number of people on the committee on this front. I think rightfully this committee pushed the program to begin to find other ways to transfer the debt. We did a pilot last fall and then did this first placement. I view it as a cornerstone placement that we will be building upon going forward. Reinsurance is an important tool, but I do not believe that reinsurance can wholly solve for the unmanaged liabilities that are in front of us.
I only have 15 seconds left, but I want to go back to the slide that I presented to you. You stand by these numbers. Do you have recommendations on what you should be doing, the regulators of banks should be doing, what Congress should be doing to make sure, if you stand by these numbers, the take-up rate isn't as low as it actually is? It's at 50%.
So we need to collectively be working with the insurance agents that are across the country who help are the frontline sales force that is there. We need to be working with the banking regulators, the lenders, OCC and others, who have those authorities in place. And collectively, we've got to push farther down the road. There were some increases in penalties that were put into the last bill that became law. Obviously, that has not forced us to see a bigger uptake. Where I see the uptake happen is when people, in the aftermath of events where they've seen their neighbors and others across their state experience flooding, that's the point by which I usually begin to see an increase in policies.
Thank you. The chair now recognizes the ranking member, the gentleman from Missouri, for 5 minutes.
Thank you, Mr. Chairman. Mr. Wright, I want to kind of go back to where the chairman was on the debt, at $23 billion. And it coverage is about $1 trillion. If we wanted to realistically try to eliminate the debt, what percentage of an increase do you think it would be required on policy premiums?
So without fully being able to model out the exact
No, I understand. I just
losses that are there, but I am finishing, I finished 2016 having used up all of the reserve fund, which thankfully had been created, and we used up $1.5 billion out of the reserve fund. I drained all the premiums that were there and still needed another $1.6 billion. That kind of event or year, the models tell me I would expect in any 10-year period, it would be reasonable to expect that. To pay off the debt seems impractical to me, in that that debt is associated with discounts and subsidies that Congress asked me and my predecessors to implement, which we did. The idea that we would then go to future policyholders and say they have to pay for that debt, I think becomes a difficult mountain to climb.
Right. So we all acknowledge, I think, that we have a significant debt. And what would be at risk if we just forgave the debt, just write it off, and with this new bill coming out hopefully before September 30, we can begin a process of preventing another rise of $23 billion.
So I think things like reinsurance help us build the credibility so that we're least likely to experience those kind of losses going forward. Ultimately, only Congress can deal with that. It was under Congress's direction that we went and borrowed those dollars. From a year-to-year perspective, the piece that has the most direct impact on us is the servicing of that debt. And while today we have an advantageous rate with the Treasury, it's nearly $400 million a year that we are paying to service that debt. In this instance, the interest payments that I owe, just under $200 million this month, we will be paying based off of money that we borrowed from the Treasury.
Now, but if we had WYOs, if more than, how many, we have 70-something?
73 right-year-owns today.
Okay, if we had, if that was the program, that means they would, the insurance companies would service the debt. I mean, would service the policies.
So if this was written entirely in the private market, they would have to charge rates and submit to insurance regulators in their state. They would have to charge rates commensurate with that risk. And those rates, in many instances, would be substantially higher than we charge today.
Okay. Now, does it make sense to have a bill that we make I realize we're legislative and you're not, but I'm asking for, privately, I'm asking for advice. Mm-hmm. Would it not be helpful if we had a 10 or 12-year bill so that we could actually experiment with the WYO program, giving insurance companies an opportunity to examine and look at this program perhaps better than they ever had, mm-hmm. or that we've had, and that over as the years move by, we then reduce the government participation until it reaches a level that won't bankrupt the government.
Right. So 2 points on that, Mr. Cleaver. I think in terms of the length of a reauthorization, I would leave that to the committee. I think we need a multi-year, and there's a lot of different ways to get there. I do think that in terms of what does it mean over this next decade to see the private market grow, I am a strong proponent of seeing the private market grow. As I said in my testimony, I can imagine beginning to set aside portions, particularly new construction, at a date forward by which, when we look at that, it says that will solely be purchased on the private market. I think it gives us an opportunity to create dedicated space, let those markets take hold, take root, and flourish. Because at the end of the day, from a public policy perspective, yes, I direct the National Flood Insurance Program, and I'm an advocate for the National Flood Insurance Program, but more important is to ensure that people are covered for these risks. Because I know from after an event, when I'm on the ground, those who are insured recover more quickly and more fully.
Thank you.
The gentleman yields back. The chair now recognizes the vice chair of the committee, the gentleman from Florida, for 5 minutes.
Thank you, Mr. Chair. And if I might go back to the earlier slide that was up with questioning by the chair. Real quickly, Mr. Wright, this is taken from a policy and mandatory purchase requirement penetration report ending in July 2014. Mm-hmm. Is there a more recent report, and if so, can you provide the committee with that report?
So FEMA does not have a report it has generated. There are a number of statements and reports that are out, and we'd be happy to
the most recent would be whatever resources are out there that reflect similar data.
I'd be happy to do so.
Quickly, in regard to reinsurance. Now, how much reinsurance would you say you've purchased on behalf of NFIP in percent of your liability, your exposure? 5%.
So, if you look, it depends on what the probable maximum losses and those kinds of pieces, and you would never insure all the way to that full probable maximum loss. The 1% annual chance event across the entire program has been modeled about $26 billion. We often view that as a probable maximum loss. So I look at the revenues in any given year of retained premiums and the like. The 1% that we bought, the 1 billion, excuse me, that we bought.
So it's not a function of capacity in the market, is it?
So at some point, this does turn to a
But
capacity
there's
question.
significant more capacity than 1%, I would assume.
There is more capacity than we have used.
And I apologize because I'm going to kind of go fast here in 5 minutes. Let's talk about risk assessment, because I think that's what we really get at when we're talking about insurance, not relief, but insurance, where we have pre-funding of risk and we manage that risk. Now, there's a report, 2014 NFIP report on the feasibility of releasing property-specific policy and claims data that states, quote, full risk premiums, which are flood premiums, are not based on loss experience due to the large variability of flood losses. Rather, NFIP rate setting is based on several components that vary from property to property and involves complex calculations of expected frequency and severity of flood losses. So, you would agree with that, I would assume. And I guess my question is you don't use loss claims data to assess risk, is that correct?
So I think...
But anybody else out there who's managing risk uses loss claims data.
We do use loss claims data.
To what extent?
We use that along with other data. And so...
and about that data, do you consider the data and the calculations that NFIP uses to assess their risk to be proprietary?
I do not.
So it could be shared?
So...
I mean, you're the only game in town, essentially.
So what I've done is... part of reinsurance, we did a lot of modeling in order to get pricing from the reinsurers.
Right, but
as a result of that additional...
But for pricing to the consumer...
Correct. So to that point, I have recently released most of the data that I provided to the reinsurers. It's the fullest expression of loss that we have ever published.
Okay, so you use some loss claim data for that. But now, looking ahead also, you really just rely on mapping and elevation.
No, so I use loss claim data as well as future expected losses. There are other elements, but if I look at my rate calculations, both of those elements come into that calculation.
How granular do you get? Do you ever go to see if do you concern yourselves whether the structure you're considering to insure, which we'll have to insure, is concrete block, wood, or whatever?
We do look at type of construction. We also look at elevation of that structure and the expected, if it's in a coastal area, we look at velocity elements rather than ponding. We do look at those elements as well.
So when we talk about mitigation, what incentives are out there for an existing homeowner to mitigate?
So the first
under the NFIP.
Right. So the first incentive is that by mitigating, they're going to be able to withstand that flooding event. Beyond that, I use some ways to discount their flood insurance pricing if their community participates in the community rating system. And in some instances, we make grants available to do that elevation or acquire that property.
And if I am a homeowner that believes they have mitigated their home to withstand and have science and engineering to support that, how do I go about convincing you that I'm entitled to a discount or otherwise not the risk that you've assessed me at?
So the chief among them is going to be the elevation of that, and we have ways for you to submit those data to us, and we will look at that specific.
And if I'm
property.
successful and having spent thousands of dollars for my engineering, I bear the cost of that, don't I? There's no recovery of costs for being able to be successful against the NFIP to have a reduction in premium.
Correct.
Is that correct? I'll yield back.
The gentleman yields back. The chair now recognizes the gentlelady from New York for 5 minutes.
Thank you, Mr. Chairman. Mr. Wright, President Trump has stated multiple times that Mexico will pay for his proposed border wall. But now, according to media reports released on March 7 by the Washington Post and this morning by another outlet, it is looking like the White House is considering a surcharge on NFIP policyholders to pay for the president's border wall. So, Mr. Wright, what do you have to say to homeowners who are trying to purchase insurance through NFIP and find it more expensive because of this new surcharge? And what do you say to taxpayers in this country, because throughout the campaign trail, Mr. Trump said that Mexico will pay for that wall?
I am familiar with the report that you are referencing. To the best of my knowledge, final decisions related to the budget being developed by the White House have not been made. And so I need to refer you to the Office of Management and Budget related to those pre-decisional elements related to it. The assurance that I can give you, Congresswoman, is that when we do have a budget proposal that is in hand, I'd be happy to sit down and discuss that with you.
Well, I can tell you this. Policyholders in my district, in Red Hook, in Lower Manhattan, that were devastated by Sandy, they truly, truly believe that this is an outrageous idea. And I hope that you can take that to the President. Mr. Wright, in response to the systemic problems in the WYO program that surfaced after Sandy, I have introduced H.R. 1423, the National Flood Insurance Program Reauthorization and Improvement Act of 2017, to improve the efficiency and transparency of the processing of claims and provide better oversight and management of FEMA and the right your owns. What lessons has FEMA learned in the aftermath of Sandy, and how have you incorporated those lessons into your current practices?
I appreciate the question. As we look at, clearly, Sandy was a pivot point. The program had lost the focus on the policyholder and on the customer that needed to be there. There are many things that we have learned, some of which change how we sell policies going forward. But let me take particularly the element related to claims and oversight, because I think that's where you're headed with this. We have now issued instructions that ensure that after an event, we go down and provide additional training to adjusters before they go out. We've increased the amount of quality control of those adjusters. To the point of engineering reports, I have issued instruction, so there's policy out to all of the write your owns. Whatever engineering report is the basis of the claim decision must be provided. Must be provided to the policyholder. They have a right to see what those elements are.
Okay, thank you. A number of the Sandy claim disputes revolved around whether the flood caused the damage of the property had a pre-existing condition. Mm-hmm. Could you tell me what fraction of the properties in the NFIP currently have such a pre-existing condition that might lead to denial or reduction in a claim payment? Yeah. And if not, what will FEMA need in order to estimate that figure?
So I think that the nature of structures, particularly residential structures, continue to evolve over time. And so I don't know that you can ever have a perfect insight into it. Mm-hmm. As we look at these elements, what I've tried to do is make plain. So one of the things that we've given advice to policyholders, and actually it's true for all kinds of insurance, you should be taking pictures and a video of your home every single year all the way around and walking all the way through. You will have physical documentation of what pre-existing looked like in these instances. But we have to look at this. You know, I sometimes use a car example related to insurance.
You're not of the opinion that you need to go and inspect a property before buying a flood insurance policy?
So today an agent works with them, mm-hmm. And there are data that are collected. I don't know about the feasibility of visiting all 5.1 million policyholders.
Okay. Thank you, Mr. Chairman.
The gentlelady yields back. The chair now recognizes the gentleman from New Mexico for 5 minutes.
Thank you, Mr. Chairman. Mr. Wright, continuing the discussion there that Mr. Ross had about the release of your data, are you allowed by law to release that data?
So the constraint, the legal constraint that I have says that I need to continue to comply with the Privacy Act when I do so. And I know that folks have wanted more.
I just need to get to an answer. We got a lot of questions here. You can do it or you can't do it without conditions. I know you may have conditions, but you can do it.
I can release data, presuming that I do not violate the Privacy Act.
Recently released data. Why did it take this long to release the data, and what's it going to take to release the rest of the data? If you're going to get private lines into the market, they need something to work with, so why did it take this long?
Sir, it's something that we have worked at for a number of years. It hasn't moved fast enough. Part of what I did is I had to package up and do modeling related to reinsurance last year, and so I've now released those data.
Why didn't it move this fast? So what were the holdups internally?
So there are some realities related to some systems that are in place, and then how would we package up those data to make them available without violating the Privacy Act?
when I translate that to West Texan, which we speak out in New Mexico, sound like stall. I don't know, maybe it is, maybe it's not. And the problem is that you keep saying that we need to get the private sector involved, but when you don't facilitate that with the data, and I think Mr. Ross made that very clear, that that's the basis, then it's just words, that we're going to get the private market involved. It's what your testimony says, but we don't actually ever make it possible. We don't ever make the information available. So we go year after year after year without that, and it gets very frustrating because now the taxpayer's on the hook for stuff that you said previously in answer to questions that we're not ever going to pay it off. You don't see a way to get there to pay that off. That's very frustrating for us up on this side. So when a community is changing the focus, when a community is going to join in and participate with FEMA, is there a process? You all have to get an agreement back and forth?
Yes, sir.
So recently, one of the tribes in my district got FEMA maps published, and that was during the last year. They had never entered into an agreement with FEMA. So how did that occur that one of the tribes didn't have an agreement? FEMA admits it doesn't have a signed agreement, and you go in and map. How did that occur?
So we have direction and authorities to do mapping across the country. I would need to go back, sir, and look at the specifics in this instance. In many contexts, we're doing
You don't get
watershed.
signatures from Indian tribes.
We do watershed-based analysis.
I say you don't get signatures from Native American tribes to get into the FEMA system so that the maps are drawn. Yes or no?
I require them to give me a signature if they want to join the program when they're
Okay,
done.
so they didn't sign. They didn't indicate that desire. You all admit that you didn't get the signature. You went ahead and mapped anyway. And so I've got constituents of mine asking how a government agency proceeded like that without their approval. And I'm trying to get an answer from you in this hearing today. How did that happen?
So I can go back and get the specifics on this map and the information related to the tribe. Ultimately, it's the tribe's choice about whether or not to join the national.
They made the choice not to join. I'm telling you, they made the choice. You did it anyway, and I'm asking how that moved forward. You said that you require, so surely the agency had some ability. They've admitted they didn't have the signature. Surely they have the ability, whoever went out and mapped it has some requirement. Checklist, yes or no, agreement. Don't have it. I probably shouldn't go on there and map that, and they did. And I'm just saying that you need to get me an answer because I'm being asked to give an answer. And that process needs to move rather quickly instead of rather slowly, like the whole release of data. I don't want it to take that long, if that makes some sense.
We will get you an answer, sir.
Now, when I look at the $4 billion, 83,000 participants that you paid out, that's $48,000 per person, roughly in the 28 seconds. How's that money distributed, or how's that money used? What was it distributed for?
So when we distribute money post-claim, it's to pay for the damages to that facility. So we'll send out an adjuster, we'll look at the damages. Once those are documented, we will pay for the eligible damages up to the maximum value of the policy.
And the $10,000 advance payment, what's that for?
That $10,000 was part of it is part of their claim payment. It's the first piece of that, ensuring that policyholders who were insured have money in their hand immediately following the event.
Okay, I'll look forward to hearing from you on this. Got a tribe in my district. Thanks.
Will do so.
Yield
Thank
back
you,
the
sir.
time.
Gentleman's time has expired. The chair now recognizes the gentleman from Massachusetts for 5 minutes.
Thank you, Mr. Chairman. Thank you, Mr. Wright. Mr. Wright, you realize we're here again doing flood insurance because some people in this committee have a blind philosophical commitment to total privatization of the flood insurance market. I'm just curious, do you think we could privatize it tomorrow?
I think that there is a portion of the risk.
Do you think we could privatize the whole thing? Right now, we've always had some private entities in the market. And nobody, I think, objects to that. Do you think that we could privatize the entire flood insurance market now?
There's a portion of the risk that I believe will likely always be with the
It's a very
National
simple
Flood
question.
Insurance
Can we
Program.
do the whole market or can we not? Yes or no? Very simple.
I don't believe we could do that today.
I thought that was your answer. I just wanted you to say it instead of me. I guess Let me ask you a question. When you work for FEMA, you don't just work for flood, you also work for any other emergencies that happen or any other catastrophe?
I have responsibilities across
what
the
I
full range of natural
Could
hazards.
you tell me if there's a difference if I lost my home to a flood or a tornado? Do I care about that as an individual? Have you ever met an individual who cared how they lost their home?
At that point, they're focused on the fact that they lost their home.
That's what I thought. Yet we treat them differently because we don't have any tornado insurance trust fund. Is that correct? Do I miss that?
Tornado is covered under the standard homeowners policy.
Right, standard
across the
homeowner
country.
policy and/or FEMA. But if there's a massive tornado that comes in and rips up thousands of homes, we don't have a typical thing like flood insurance.
Most of those residences would be covered in their homeowners. FEMA's role, oftentimes from a financial perspective, deals with the community and their infrastructure post-disaster.
So when we come back in, we still pay lots of money. See, I personally think we should have a natural disaster insurance fund as opposed to simply a flood insurance because I don't think people care. It also avoids the argument after the Sandys and the Katrinas, did your house go away by flood or did your house go away by wind? Who cares? Nobody cares except the insurers who don't want to pay, which I understand. But nonetheless, I would argue that that's something we should be looking at. I guess, as I was reading your testimony, you did talk about privatization for new construction. What do you think it would cost if it was just new construction? If I had a home here and I built and it was by flood insurance and typical, and I built a home right next door that was brand new construction, but the exact same home as was next door, what do you think the cost differential would be? About.
So I'd have to let the private market actually price their risk. What I would tell you is this. Given the maps that are in place, the building codes that are in place, new construction would be built higher and stronger. It is an insurable risk. At that point,
So what do you think it would cost? About the same?
it would be likely commensurate to what we charge,
Commensurate to what we charge now.
minus the surcharges and other assessments that we're required to put on.
So it would cost more.
Mine would likely cost more.
Right. And what do you think that would do to small communities or small businesses that wanted to expand? Because new construction is also expansion. Who wanted to expand or wanted to build a new restaurant or a new little grocery store to service people?
Congressman, I think this is why we need to lay this out and give ourselves a few 3 years or whatever the right number is so that these markets can build out. We will be better.
Can we do that if we simply kick this down the can again, like we did? If we just kick this can down the road another year or so, because we won't be able to come up with an answer, do you think that'll happen?
It would require a more comprehensive action by this body for us to make.
So you think we need to do something that takes, what, 3 years minimum, 5 years minimum?
I would assert to you that we should work with the markets. I would say something like 3 years or so that we can see it build out would be an appropriate piece. At that point, the private markets will be there, and they should be able to respond to those elements.
Do you think if we simply do what we've done already, which is to say, let's delay it a year, let's just keep what we have, because we can't come up with a conclusion, you think that would be a missed opportunity?
So I will tell you that my first priority is to get a multi-year reauthorization done, and that can be done in a one-page bill, or that can be done in a 300-page bill. The first priority is to make sure we don't have the disruption.
I would agree with that wholeheartedly. By the way, just out of curiosity, do you realize how many second homes are there in, I don't know, let's say Florida?
I don't have that number, sir.
I think the answer is a lot. And how many of them are Mar-a-Lagos versus, maybe a small condo or a few hundred feet from the beach, or maybe even a trailer park? Do you have any idea? I mean, like a double wide.
Sir, I don't have a second home, and
I
I'm
can only
not
tell
an
you,
expert on
my
that.
in-laws had a double wide, and it wasn't the multi-million-dollar home, and it was in Florida, and they were in a floodplain, and if it went totally private, they would have had to sell their double wide, gone away, and that town would have lost thousands of residents because of it. Thank you, Mr. Wright.
The gentleman yields back. The chair now recognizes the gentleman from Florida for 5 minutes.
Thank you very much, Mr. Chairman. Mr. Wright, flood insurance policyholders pay for increased costs of compliance, ICCs, as part of the standard policy that offers $30,000 to cover the cost of certain mitigation measures. So that's up to $30,000 for a policyholder to elevate, flood-proof, relocate, et cetera, to come into compliance. However, they can only access the money after the home floods, a claim is filed, and the community makes a determination of substantial damage. Usually when I hear the word mitigation, I kind of visualize the word prevention, you know, and it's not really mitigation, I wouldn't think, if we're only allowing the policyholder to take these measures after the fact, you know, after the damage has already been done. So the statute does authorize ICC for homeowners who receive an offer of pre-flood mitigation. And just wondering if you've implemented any part of that statute.
So, given the breadth of my responsibilities, I'll tell you, there is no bigger proponent of building higher and stronger from a mitigation perspective than myself. As I look at ICC, this increased cost of compliance sits inside an insurance program, but it really is a mini grant. And so we're told by Congress to set a price. There's a cap that is put on that price so that we can collect revenue for it. A decision to expand ICC to a higher number or to allow it to be applied in more instances would require us to collect more revenue related to that increased cost of compliance.
Okay. So that's why it's not been implemented. You don't have the revenue.
Sir.
Okay. Is it true that a few years ago, FEMA considered providing ICC grants before property floods when it's more cost-effective?
We have considered the pieces in the past. Up to this point, we've implemented the pieces that are consistent with the revenue that we bring in.
Okay. So, you know, what happened to the rulemaking when they were going to do the pre-catastrophe?
So today, and we can get back to the specifics, I have a tolerance, I think, in the statute up to $75 that I can collect in premiums towards that increased cost of compliance. Those dollars are already being occupied based on those who are in the post-event environment. And so we have looked at this. Given your interest, sir, we'll look more into it.
Thank you. On another note, I want to ask about the Flood Insurance Advocate Office. The Homeowner Flood Insurance Ability Act created an Office of Consumer Flood Insurance Advocate to help homeowners navigate the flood insurance questions. Can you give us an update on how this office has been able to help consumers since 2014?
Yes. I think it's one of the things, as I look at Hafaya as well as Bigger Waters, it's one of the things that I can say is truly has produced value and benefit for us. This group has a really set of independence allowed to them. They get the frustrated and confused policyholders. It's this last kind of relief valve that is available to them. Their caseload has continued to rise as people become more aware of it. They work the specific case. But just as important to me is the fact that as they look at their caseload, they are making recommendations back to myself and the FEMA administrator about ways that we can improve the program and intervene in ways so that we can really be a learning organization so that we don't repeat those problems.
What's the biggest complaints you hear from consumers, and how can we help address those in a reauthorization?
So one of the concerns, so we get some concerns about the rates that they have to pay, and they want to make sure that those have been looked at and any way to reduce their rate that they can have. The second piece that they look at is their understanding of the coverages that they have. In the most recent report from the advocate that was given to me and has been released publicly, he has also highlighted the concerns about processing of the ICC, the increased cost of compliance. And then I have a whole smattering of things. Sometimes it's on a mapping issue. Sometimes it's on an underwriting issue. I get a report from him every 60 days looking at the kind of the throughput of what they're hitting. He can make recommendations anytime during the year, and then once a year produces a public report.
Well, thank you for your frank answers. I yield back, Mr. Chairman.
The gentleman yields back. The chair now recognizes the vice-ranking member, the gentleman from Michigan, for 5 minutes.
Thank you, Mr. Chairman. And thank you, Mr. Wright, for being here. And like my colleagues, I am quite concerned that we reauthorize this program in a timely fashion. I think many of us on the committee and in this room knows what happens when there is uncertainty in these markets. It's not that long ago that we saw TRIA go through a similar situation where uncertainty and the uncertainty that this Congress would reauthorize that program led to a real impact in the marketplace, and we would certainly hate to see the entire housing market impacted by our inability to move, and I agree with you to get a longer-term reauthorization. That's really not the direction I'd like to take. I'd like to follow up a little bit on the last set of questions, and in your answer on consumer concerns, you mentioned a few areas, and you indicated that one of those areas where I think your term was a smattering of complaints or concerns that had to do with mapping. And I wonder if you first just might comment on what your level of confidence is or what your assessment is of the accuracy of the maps as they currently exist. I know it's a dynamic process, but in general, how would you characterize the accuracy of maps that are determining which properties fall into the category requiring insurance?
Yeah. So I would characterize the maps today as credible. And the nature of the science continues to evolve. The nature of the built environment continues to evolve. By statute, the mapping process is done in collaboration with the communities. And you can always buy more data. You can always buy more precision. I've got to work with the resources that I have. And that's why, from a credibility perspective, when the maps are developed, they are then sent to the community for review and comment, ultimately going through a formal due process and appeal period for 90 days.
So tell me, though, it would seem to me, and having worked in local government for a very long time and seen just incredible changes in the ability of a community to deal with, just say, planning and zoning or other land use issues through the development of new technology with GIS and all the other tools that are available, it would seem to me that we ought to be able to be much more efficient in terms of updating maps. And I raise that because, at least in the area that I represent, I'm from Michigan, we run into significant problems with accuracy and also significant delays with the time-consuming nature of the appeal process for individual properties. What can you say about what is lacking, if anything, in the availability of technology or new applications that might make more efficient the updating of these maps?
Right, so the single thing that would push us in a leapfrog forward would be to have an elevation layer, ground elevation layer across the nation. Today, so when we go to build a map, we got to know where the ground is, we got to know how much water, and we're going to have to know how deep it's going to be, and then how it's going to interact with the built environment in terms of the structures. Today, we partner with other federal agencies and state agencies to acquire, usually LiDAR is the technology that is referenced, that light detection radar that is used, but we don't have enough of it today. And so there's a significant investment that needs to be made in that national elevation data layer. Today, I buy it piecemeal. I buy it one watershed at a time, one piece. But what I do know is we are running a couple pilot projects with states. Minnesota's one of them next door to you, where they have a statewide digital elevation data. And we're using some of the innovations in technology that are speeding things up tremendously because the automation works very well when you have highly accurate ground elevations.
Well, I would certainly encourage that and suggest that you include in any of your recommendations. The accuracy issue is really an important one. It affects, individual customers, but it also affects the entire program, and I'd be really anxious to see some movement in that direction. And also, if you could just briefly comment in the few remaining seconds, anything that's being done to streamline the process for individuals to challenge maps. That can be very time-consuming and also often becomes irrelevant because of the time involved.
So if you want to look at a map amendment on a single structure basis, when those data are submitted, on average, it's a 7-day turnaround time. Some of it can be done online within 24 hours. So if you're doing single structure data to submit to us, I think it goes pretty quick. If you're trying to do something that's more of a neighborhood scale, that map revision process is longer. It requires us to verify data at a much greater level of precision. And we are required under the statute to go through due process. And so a draft has to be presented to the community. Ultimately, we have to go through the Federal Register for a 90-day appeal period. I do think that this element is one that we could explore through reauthorization. In particular, this particular element of it, and I know that other members have asked me about this in the past, if there is no objection to the map and the data was generated by the community, well, I don't think we can bypass the due process because there may be a homeowner who believes that they have an equity in this. I do think we should be looking at ways to leapfrog elements and push faster.
I thank you, and I know my time is over. I thank the chairman for his indulgence. Thank you very much.
The gentleman's time has expired. The chair now recognizes the gentleman from Pennsylvania for 5 minutes.
Thank you, Mr. Chairman. Good morning, Mr. Wright.
Morning.
You mentioned in your testimony that at a national scale, estimates lead FEMA to believe as little as 1/3 of residential properties in the special flood hazard area have NFIP policies. What, if anything, does FEMA do to coordinate with banking regulators to determine whether homeowners with federally linked mortgages are actually current NFIP policyholders?
So we cooperate with the regulators. As I understand it, and I am not a banking regulation expert, when they come in, they do a small sample of the book that may or may not even be in the special flood hazard area. If it is, they would check to make sure that the right kind of insurances are in place. That cooperation, though, is simply how we deal with the enforcement. Where we have focused is what does it mean to do the outreach at the point of a new map and working with the agents as well as the state commissioners to advocate that people do those purchases.
Is this a reactive or a proactive approach? If you say that you're cooperating with the banking regulators and they're coming in to take a look, that's a little different from you proactively going out and assessing.
Right. So I don't have, to my understanding, I don't have the authorities to go in and ask to see a bank's book of business and do that audit. The banking regulators have that authority. So I defer to the Office of the Comptroller of the Currency and the other regulators.
With the regulators, the OCC, the Fed, the FDIC, and the Farm Credit Administration, as well as the NCUA, issued a joint notice of proposed rulemaking last fall in November concerning the implementation of the private flood insurance provisions of Biggert-Waters. In this release, the regulators proposed a provision that would allow regulated lending institutions to accept, at their discretion, certain flood insurance policies issued by mutual aid societies, which are common in the Amish and Mennonite communities in Pennsylvania. As you may be aware, due to their religious beliefs, members of these communities do not purchase traditional insurance products, and they have established a long tradition of insuring their own communities. How does FEMA view this proposal?
FEMA has not taken a formal view on that rulemaking. That said, I believe that what is proposed personally is right-headed, and the kind of provision that you're highlighting, I think, is an important one.
I've heard concerns about homeowners receiving widely divergent flood insurance quotes from different insurance agents. Much of this is likely due to the challenges associated with navigating the NFIP. How can we make it easier for insurance agents to provide consumers with consistent and accurate information?
Congressman, I think you really have hit the heart of some of the transformation we're trying to do in the program today. It is too complex. And while I don't find it acceptable that they're getting different answers, I can understand how that can happen. So I think we actually need to get ourselves to a point by which, given our understanding of the underwriting and actuarial provisions of the program, we can get to the base information. Today, the application and the questions we ask are far too many, and there's far too much room for misunderstanding that can move one direction or another.
So what are you doing in that space right now? Do you have a plan?
Yep. We sure do.
When can we expect to see something?
Yep. So later this spring, so for the last 8 months, we have been working to rewrite the underwriting manual, which is where all of those instructions are at. Frankly, it was not in plain language. Over the course, sometime in April, we will be releasing that in beta and testing it with the agents on the ground. It will go into full effect this summer. We're doing a similar kind of thing on the claim side. Ultimately, we've got to look at the coverages because this kind of push-pull that happens often gets, well, I want this. There's too many options that bring too many complexities, and usually they don't fully understand that until the day they file a claim. I got to bring that forward. Ultimately, if with this underwriting approach, I would like to get us to a point by which we're using online and technology-based ways by which the same answer is being produced every single time.
Any idea what would require, or what would it take to make that happen?
So the first thing is we're going through a modernization of our IT effort. We actually have gone through all of the reviews with the Department of Homeland Security, and we are beginning agile development this spring on elements of it. Over the next 2 years, more of those pieces are in place. We're also partnering with the Write Your Own companies who can implement these technologies themselves to make sure that there are data standards in place to better enable us to use technology.
I had to step out and take care of something outside, but you might have been asked this question already. I just want to see what the answer is. As I've studied the NFIP, I've noticed how difficult it is to get complete and usable data. I can only imagine how difficult it will be for firms in the private sector that want to get into the flood insurance business to get a better understanding of the NFIP's historical data. Is there a provision in law or some other reason that FEMA cannot share this information with insurers?
So the chief concern is one related to the Privacy Act. What I have done, and again, I've been pushed rightfully on this because we did not make enough progress on it. We were able to use do new modeling last year related to reinsurance. It was sufficient for the reinsurers to price the products for me. And I have recently released most of the data that we worked on with those reinsurers, and they're now available to be downloaded from FEMA.gov.
Gentleman's time has expired. The chair now recognizes the ranking member, the gentlelady from California, for 5 minutes.
Thank you very much, Mr. Duffy. Let me just say to Mr. Wright, I appreciate you being here and sharing with us how FEMA works. You're in an untenable position. You were asked by Mr. Duffy, what is your plan for reduction of the debt? I wish you could have told him there is no such thing as a plan for the reduction of the debt. We're paying $4 billion a year on this debt. The Congress of the United States of America will have to make a decision about this. And I don't know what my colleagues are thinking, but you know I use the word forgiveness. I really do believe that we need to forgive this debt. This agency needs a revolution, and it starts with forgiving the debt. There's no way that you could plan to forgive this debt by raising the premiums or doing some of the other things that you say that you do in order to come up with premium costs. You talk about loss claims data, future expected losses. You can redo that 1,000 times, but it's not going to reduce this debt. And so I'm going to be working very hard to try and convince my colleagues that we need to really, really step up to the plate and deal with this issue and this issue of debt. Having said that, when I talk about a revolution, in addition to forgiving the debt, I think the members of Congress really do need to understand all of the calculations that go into determining premiums. You talk about loss claims data, and there seems to be some misunderstanding about whether or not you're actually using this. I heard the questioning on this issue, and it sounded as if you said that's part of it. We don't know how much of that is taken into consideration. I heard you talk about future expected losses. How much of that? How is that calculated? Is this truly scientific? On and on and on. I would like to say to the chairman of this committee, who's sitting here, that we need to have a special task force on flood insurance alone so that you would be able to take the agency apart, working with the members of the special task force to understand how you come up with your calculations. And I think that if we started out anew with these premium costs, we could correct a lot of things. You know, there's been problems with mapping historically. And my staff just brought me a copy of a press release that we did about a mapping area in Los Angeles that I got involved in 2010, where we worked with FEMA, and FEMA changed because when they took a look at what the citizens were complaining about and the whole area and the fact that it never had a flood, on and on and on, when they gave consideration to all of these things, they changed their mind about the way that that mapping had taken place. The other thing that I discovered in working on this issue was, I know that you send the notices or information to the cities, and the cities have an opportunity to raise questions, to talk with the community, but oftentimes they don't do anything. You send that information to the cities and it just goes into a file somewhere. And the citizens don't get an opportunity to really have the cities working with them to bring their concerns to you. And so for all of these reasons, I think that we really do need to have this, this change, this big change, this revolution. Now, on top of all of my concerns, and even what we did after we changed our minds about Biggert Waters and we came up with the repeal, we didn't treat those small businesses right. And everybody on this committee claims to be concerned about our small businesses, but yet, when we take a look back at what we did and what their responsibility is in terms of premium costs, it really must be corrected. Now, on top of that, you had nothing to do with this, but to fund the border wall. Trump administration weighs cuts to Coast Guard, airport security. Your name is not in the headline, but the proposal drawn by the Office of Management and Budget would also slash the budget of the Federal Emergency Management Agency, which provides disaster relief after hurricanes, tornadoes, and other natural disasters. The Coast Guard, $9.1 billion. In 2017 would be cut 14% to about $7.8 billion. The TSA and FEMA budgets would be reduced about 11% each to $4.5 billion and $3.6 billion. This is outrageous and unconscionable. And so, Mr. Chairman, I hope that you're listening and you're going to take this into consideration. You can pound all you want.
You are over your time, Ranking Member.
The ranking member would respectfully request and unanimous consent for 30 more seconds.
Without objection.
Thank you so very
This
much.
is so compelling.
I just wanted the 30 seconds to say that you now have a big responsibility. And you asked the question of Mr. Wright when he came in about what he was going to do to reduce the debt. I hope that you've paid attention so that you know that all he can do is continue to pay that $4 billion every year on this outrageous debt. And I hope that you're hearing some of us when we ask you to take consideration for eliminating this debt. This are natural disasters, and our taxpayers deserve better. And I don't intend to sit here and work on any increased premiums. Thank you so much, Mr. Chairman.
To the ranking member, thank you. It was only a minute and 38 seconds over your time.
Thank you for that.
I've been trying to be generous to let Mr. Wright finish his questions if he's over, but to you, the exception goes, ranking member. With that, your time has definitely expired. The chair now recognizes the gentleman from Michigan for 5 minutes.
Thank you, Chairman. Just a point of clarification, Mr. Wright, and thank you for being here. And the ranking member has mentioned a couple times in her questioning and in the opening statement how unfair, and I believe she means $400 million in interest a year, not $4 billion, but how unfair it is that we're collecting this interest, and it's how it's costing the program, and that's the reason for the inability to repay the $24 billion. And it should be forgiven. Just a point of clarification, it's really not costing the program $400 million a year. It's costing the taxpayers $25 billion at the moment. Isn't that a correction that needs to be made? It's the taxpayers, right? That's what we're talking about.
So the taxpayers have loaned us $24.5 billion. The policyholders are paying $400 million of their premium towards servicing that debt.
So let's talk about your solution. In your opening statement, you talked about the need to have the private sector play a greater role. And so I assume that you believe that the private sector would step in to fill this need if we remove some of the barriers and maybe figure out a way to better share the data. Is that a fair assumption?
So I think that's an element of it. I think time would have to show what the private sector would do. Over the last 49 years, the National Flood Insurance Program has been. I don't know that those markets have flourished. I would note that there already are private markets selling the excess coverage, as well as in some states there are flood riders that are particularly used for areas outside the high-risk area.
And so I'm concerned about, as we move towards a long-term solution as part of any reauthorization, kind of the sticker shock issue. And allegedly one of the unintended consequences of Biggert Waters was the sticker shock that some of the homeowners experienced. So do you believe there is a way over a period of years to implement a solution that greater involves the private sector, that would allow for actuarial sound premiums to be put in place where homeowners wouldn't lose their homes?
Congressman, Congress is going to need to make some choices for me about that, and I can implement them. In this instance, what I will tell you is there is no more effective risk communication tool than a pricing signal. And I was in communities, actually sat next to members doing town hall meetings in the intervening time between Biggert Waters and the Homeowners Flood Insurance Affordability Act, where I heard the outcry in terms of the impact from an affordability.
So could that have been avoided? Is that something we could have avoided in hindsight? As part of any solution, we don't want to have that happen again, right?
I would assert all of us would be better off if we didn't have that happen again.
None of us wants that. So is a solution that you can envision, is it possible to avoid that scenario?
So the first step that we're already taking under Section 28 of the Homeowners Affordability Act is to clearly communicate risk. And so this is the first year that we're pushing out a notification that says, here's your premium, but this is what the full risk rate would be, or at least the range of what your full risk rate would be. We still are implementing escalations in the policies that move us there. I think the 2014 Act put a much longer time horizon on it, whereas the 2012 bill did it quite quickly.
Okay. So part of the problem, as I understand it, is approximately 1.6% of the 5.1 million policyholders account for 24% of the claims. At least that's a statistic that was shared with me yesterday. So how does the solution, in your mind, address that problem? Because that seems to be the crux of the issue, is we've got 85,000 policyholders that are accounting for the vast, an inordinate number of claims.
And so I think when you look at the insurance realm, it is not unusual to have a small segment that is occupying a good bit of the claims payments. For me, what is highlighted, and this is not always popular, but I think we have to look at those repetitive loss properties, because under the statute today, I'm required to continue to offer them coverage. And there may be a point that we should draw that says, if your total payouts of claims exceeds 200% of your of policy limits or some other number, I offer that hypothetically to you, we're in a position by which you need to get your insurance through another means. You need to have lost those ability to have those cheaper rates. I think we've got to look at that. I would point us back to some learnings from 2004's reauthorization, where there was an attempt at a 3 strikes and you're out. I don't think that worked as effectively, but we could find a way to draw that line.
Thank you. I agree with your comments. And when my time's running out, I come from Michigan, the Great Lakes state. What's the status on sharing the data that's being collected by CStorm in terms of the flooding patterns for the lakes, because they're much different, obviously, than the coastal areas? And when can that be available to my constituents? And does the same privacy concern hold you up from doing that?
The privacy concern only deals with address-specific claims data. The work that we're doing on the Great Lakes today is ongoing. We'll work with your office to make sure that that is made available to them. We are partnering with the state of Michigan and the communities to share that data. As you know, the lakes have been on a downward trajectory, and I think you'll see that reflected in the update of the maps.
Thank you for your time.
The gentleman's time has expired. The chair now recognizes the gentleman from Nevada for 5 minutes.
Thank you, Mr. Chairman, and thank you, Mr. Wright, for your presentation, being here this morning. I have a couple of questions relating to climate change. Climate change is a real threat, and I think we're going to start seeing folks get washed out more and more often. I believe we'll see more Superstorm Sandys, which will cost the program billions and billions of dollars. Are you taking climate change into account while you're doing your mapping? And secondly, if we see an acceleration in extreme weather events, Wouldn't this add further debt to the NFIP? And is this something we should be considering as we work towards reauthorization?
So there are a number of future risks that we have to consider in the National Flood Insurance Program. Climate variability, climate change is one of those. In 2012, Congress directed us to use our Technical Mapping Advisory Committee. It's been a very beneficial group for us to specifically look at this. They have delivered a report to us related to future risk and future conditions and how we would map that. I do think that we could benefit from showing that risk to communities in a more forward way. But let me draw two important distinctions. When we're charging insurance premiums, we should do it based on today's risk. I should inform the built environment based on our understanding of the future, but I shouldn't be charging a premium based on a risk that has not yet arrived. The second piece that I would highlight, and we released a report in 2013 to this end, as you look at the changes that we anticipate between now and 2100, there are changes in climate, but a third of that change in risk is wholly attributable to changes in the built environment. Essentially, where do the next 50 million people live? Where do we build their homes and their condos and their apartments? Where do those pieces set? And how that's sited. Because frankly, every time we keep building, if we don't do it intelligibly on the way in, we exacerbate those flood risks.
Thank you, Mr. Wright. And my other question has to do with rural America, and my district is, for the most part, very rural. On the one hand, we saw in the aftermath of Hurricane Sandy that there were serious concerns about engineers not having the proper expertise to be handling flood claims. But on the other hand, it can be difficult to find a sufficient number of qualified professionals in the area in the aftermath of a storm this size. That was in New York and New Jersey. My district includes Las Vegas, but it also goes all the way up to almost Reno. For my East Coast colleagues, that's the same distance between Washington, D.C. to Boston or Atlanta. I have a number of constituents that reside in rural counties. And though we definitely don't have the flood issues some of my colleagues do, these counties do have thousands of NFIP policies that have paid out hundreds of thousands of dollars in claims. What is FEMA doing to ensure that we have a sufficient number of qualified professionals handling claims in the aftermath of a storm, especially in rural counties?
So let me take the rural county piece first, and then I'll broaden out to the broader piece. So as we look at rural counties, we see flooding go on most weeks of the year in some rural county across America. The number of claims we would see in those instances are low enough by which I can get enough adjusters and the like on the ground pretty readily, and allows us to close out those claims and get them paid in a very timely way. It's usually in an urban context, think more of your Las Vegas context, by which I start seeing tens and hundreds of thousands of claims, and that's the point that stresses the system. So what have we been doing to address the stresses on this system? We've been working with the companies to ensure that we're building out more capacity for adjusters. We're also looking at technology. Technology, first of all, to do the quality control to ensure that there is not sloppiness, there aren't inadvertent errors being made, but also ways that I can imagine in the years to come for claims being able to be adjusted by people taking pictures on their smartphone. And when this is a smaller scale, this is a $10,000 or $20,000 claim, I can imagine them taking pictures, uploading those to us, and us adjusting this remotely, which saves a tremendous amount of time and would be able to get those dollars paid far quicker.
Thank you, Mr. Wright. I yield the remainder of my time, Mr. Chairman.
The gentleman yields back. The chair now recognizes the chairman of the full committee, the gentleman from Texas, for 5 minutes.
Thank you, Mr. Chairman, and thank you on behalf of the full committee that you're holding this hearing. Mr. Wright, I just wanted to follow up on a couple of items that you've already testified on, and particularly I want to follow up first on the question from the gentleman from Michigan, Mr. Trott, and that has to do with the repetitive loss properties, and I don't quite recall the term of art, if it was severe repetitive loss or simply repetitive loss, but approximately 2% of the properties are accounting for roughly 24% of the losses historically. So you mentioned a 2004 effort, kind of a 3 strikes, you're out. So could you give us a few other thoughts and approaches, how FEMA is thinking about these repetitive loss properties, and any different approaches you would bring to the committee's attention.
Right. There's some nuances to the 2004 piece, but overplayed 3 claims of $1,000 apiece would strike you out. And I don't think that that's ever quite the intent we're looking at. And so the first thing we need to do is actually move the threshold of what we consider the repetitive loss. Where's the big money going as opposed to some things that may just be some nuisances that were applied? As I've thought about it, and we've begun going through the data, and my team hasn't finished on this point yet, there's a point by which we've got to draw a line and says, if you exceed, is it 150% or 200% of your policy limit, at least we need to take the subsidies and grandfathering away from you. You need to be paying the, at its face value, actuarial premium, or we should tell you to get that on the private market. There is the other side of that coin by which some of these are in places where the homeowners are of less means and wouldn't be able to actually take that on. And so I think we've got to look at that dimension of it, but the face of it is, in any other kind of insurance piece, that fourth time to the well, we change the rules somehow. And I think it would be wise for us to do so.
Well, Mr. Wright, if I could suggest, if your staff could prioritize analyzing this particular data, I share your goal of having a long-term reauthorization.
I know you do.
September 30th is looming large, but this is an important part. Also, you, I guess fairly early on, perhaps in your testimony, you spoke of mitigation, and 1 or 2 other members spoke of it. So I think the grant program is a relatively small portion of the FEMA budget today. But could you expound upon your thoughts and, again, other matters you would bring to the committee's attention in the mitigation space?
So the mitigation investments pay off over and over again. I have 3 different grant programs that I'm accountable for. One of them is funded by the Stafford Act after events. That's where there's anywhere between $700 million and $1 billion a year spent in that space. Congress then also created a pre-disaster mitigation fund, averages about $100 million a year. And then inside the National Flood Insurance Program, we have a flood mitigation assistance program. That is paid for by the premiums of policyholders. So $175 million, which is not enough to actually mitigate risk. You know, I kind of look at these upper limits of $26 billion or $45 billion worth of risk that I could assume in any given year. What do those pieces look like? The limited pot I have today, I prioritize on repetitive loss, severe repetitive loss properties, all moved at the top because that benefits the fund. I think we would do more to help communities if we started taking on projects that were a bit larger at a community scale. So rather than do 3 houses on that block, what does it mean to actually take that entire block out of harm's way? The question is, where do the resources come from? Where do the resources come to pay those bills? I don't know how much more policyholders can bear, and I don't know what the appetite is for that to come out of general appropriation.
In the seconds I have remaining here, you have indicated a desire to open up greater space to the private market. The committee shares that particular goal. I know we've had a fulsome dialogue between your office and this committee. But is there any barrier to entry, as you understand it, that has not been brought to our attention?
I think there is a reality that when these markets stand up, they're going to be subject to state regulation, appropriately so. McCarran-Ferguson gives that responsibility there. And they need to be able to price a product. But I think what's keeping us from actually seeing it broaden up is, what does it mean to actually establish? They will guard against concentrations, which I don't today. They'll have to make sure that their rates are affordable and that they don't push and pull out. But I really see that we need to move to an appetite. Because one of the things I've pushed the private markets on is, today I am responsible for assessing a surcharge of $250 on any second home. I look at properties outside the mandatory purchase, the preferred risk, and I'm putting a $250 tax on top of a $350 premium. And I've told the private markets, I said, this is a perfect place where I have a competitive disadvantage. You should be coming in and filling this space. This is cheap, insurable risk. Yet, I am not seeing that expansion happen yet. And so there needs to be some motivation that will keep pushing them down that road. And I think that will be as a stepwise process for us.
Thank you.
The chairman's time has expired. The chair now recognizes the gentleman from Texas, Mr. Green, for 5 minutes.
Thank you very much, Mr. Chairman. And if my friend, the chair of the full committee, needs additional time, I'll be honored to yield to him, without any questions, I might add. Mr. Chairman and Ranking Member, I thank you for this hearing. And Mr. Chairman, if I may say so, I want to congratulate you on being promoted to this committee, but I will tell you that I enjoyed serving with you on O&I. We didn't always agree, but I always enjoyed the opportunity to serve with you.
We were always agreeable.
Thank you so much. Mr. Wright, thank you for your appearance today. There are some aspects of your job that are complicated by virtue of things that we can do here in Congress and that we haven't done. An example would be in Houston, Texas, wherein we have floods that total $100 million, and it's not unusual. We had the Memorial Day flood in 2015, which was about $100 million. And we had the Tax Day flood in 2016, which was about $1.9 billion by some estimates. Depends on who's counting and how you count. People have lost their lives. 2015, 8 people. 2016, 9 people. FEMA paid out $57 million with reference to the Memorial Day flood in 2015. Now, I mention these circumstances because there are projects that are on the docket of the Corps that, if completed, would eliminate some of the flooding and mitigate a good deal of the flooding as well. These projects total about $311 million. We're spending a lot of money after the fact. We spend millions after the flooding, after the damage, but we could spend millions also before and mitigate and eliminate. Would you care to comment on what I've just said, sir?
So I think this investment before the disaster is imperative. And while I cannot speak to the specifics of the Corps' investments in budget, I can, and I would highlight for you a report and some findings by the Government Accountability Office last year, where they directed an interagency group that I chair to develop a national mitigation investment strategy so that we harmonize federal investments and we find ways to incentivize more private investments in this space. I would assert there's not enough federal dollars to pay for to eliminate all the risk across all the communities in this country. We've got to find ways to engage the private sector in that, and I do think that we collectively could find a better way to harmonize those programs. I expect some work later this summer to be done to demonstrate the progress there.
Thank you. With reference to our sharing risk, you're well aware that at one time the insurance companies had the entire market. And we're in the market now because it became too much for them to bear. Would you kindly explain to us the consequences of the federal government moving to becoming the insurer of last resort only and allowing the market to manage the other aspects of these disasters?
Yeah, so in many ways I would say we are the residual market today because there's a limited amount that is done through private flood, and 49 years ago there was a limited market, and where it was, the prices were quite exorbitant. I think as we look at these dimensions, we have to find the right balance. you know, Florida Citizens is often held up as an example for me to look at, and they still retain 500,000 policies through their Citizens program that the private market did not take up. And so those policies would be there. And so what would that equivalent be inside the National Flood Insurance Program? It is impossible to know precisely, but there could be 3 million or more policies that we are left with. Yet those are the ones that would be at greatest risk, with greatest kind of concentrations of that risk. And where we would pay those bills becomes difficult. The Florida example, they've got a whole series of ways by which all the taxpayers of Florida and all the ratepayers in Florida would contribute to pay those bills. We don't have those mechanisms in the National Flood Insurance Program.
Mr. Chairman, I know my time is up. May I introduce some things into the record, please?
Without objection.
I have a resolution from the Commissioners Court in Harris County supporting our reauthorization. I also like to introduce H.R. 121, which is the bill that would allow us to fund those projects that have been authorized by this Congress that would help us mitigate in Harris County. If I may.
Without objection, the documents will be submitted into the record.
Thank you, Mr. Chairman.
With that, the gentleman's time has expired. The chair now recognizes the gentleman from New Jersey, Mr. MacArthur, for 5 minutes.
Well, thank you, Mr. Chairman. We've talked about what I think should be our priorities in this reauthorization. Affordability, certainly mitigation is critical. I want to focus for a few moments on accountability, which I think needs to be a priority as well. And all of my questions and comments come out of who I represent. I represent southern New Jersey, the epicenter of Superstorm Sandy. October 29th of 2012, my district was devastated. Lives, homes, businesses, neighborhoods, communities, and we've all seen probably photos of the iconic Jetstar roller coaster sitting in the ocean. That's my district. Right. We've seen photos of the house sitting on a little island in the middle of a newly created inlet that went right through an island. That's my district. Those are the people I represent. And you mentioned earlier, Mr. Wright, 144,000 flood claims came out of that event. And of those 73,000, about half were in the state of New Jersey, and of those, 36,000 were in my home county. 50% of the claims in New Jersey were in my home county. Do you know how many people, I don't expect you probably do, but that are still out of their home now, nearly 5 years later?
I don't, sir.
Thousands of them. And might you guess the leading cause for people to still be out of their home 5 years later? It's a gap. And it works like this. There are resources from a flood policy, maybe resources from a FEMA grant, like a REM grant, to lift a home. There are resources from an SBA loan. There are private savings that people have put away for retirement, and they keep inching towards completion, and they run out of money, 95% there, but they can't get a certificate of occupancy. So getting paid fairly at every step of that chain is absolutely essential for my constituents. And that's where I want to focus for a few moments. What percentage of the underwriting risk does a write-your-own carrier take?
Zero.
Zero. Would an engineer or an adjuster have any financial incentive for depressing the amount of a claims payment?
They should not.
They should not. I want to read to you not testimony, but commentary from your predecessor, I believe, Brad Kieserman, who in February of 2015 said this on 60 Minutes, that he had seen, this is a quote, had seen evidence of fraud in reports used to deny them, the policyholders, full insurance payouts. Again, I'm quoting, "I'm not going to sit here and conceal the fact that it happened, because in the last 3 weeks I've seen evidence of it," said Kieserman. He went on to say that they had seen evidence in late 2013, a year after the storm, but nothing had happened. I'm going to ask you, Mr. Wright, to look at the two photos that are up on the wall. Do they look like the same photograph to you, left and right? I assure you they are, and they came out of your files.
Okay.
I would ask you to read what is circled on the photo on the left?
Floodwaters damage heater and boiler.
Can I, and that was dated November 12th. And on the right side is the photograph that was sent to the insured on 11/26 when their claim was denied. Can I ask you to read what is in the circled box on the insured's photograph?
Floodwaters do not damage water heater and boiler.
I don't have time, unfortunately, to put up a series of these very similar photographs, but I assure you, and I trust you'll accept that it's accurate, that they all do the same thing. You reopened thousands of claims under some pressure by me and others. Can I ask how much you paid from all of those reopened and litigated claims in the latter part of the process?
We have paid out an additional $350 million so far.
I'm going to stop you there because I have only 30 seconds left, and I have to end with commentary.
I'd ask for unanimous consent to give the gentleman one more minute of time.
I'm very grateful for
Objection.
that. You were under pressure in FEMA, and I recognize you weren't in the role then, but FEMA, under pressure, allowed my constituents to reopen claims. 50% of the claims in my state, 25% of the claims in this entire episode, you reopened them and you paid out $300 million, you just testified, $300 million that would not have come to my state had you not been under pressure to reopen these claims. Sir, I beg you, and I am telling you that when we reauthorize, me and others will be watching to make sure that there is accountability in the process. The McKinsey study that was implemented by your company suggested that people ought to pay, your adjusters ought to pay within ranges. Is that correct?
So
I don't have time to actually let you answer. I know that's what it did because we've had plenty of testimony that it did. We had 5 whistleblowers that I have statements from, affidavits from. I'll read you the quote from 2 of them. We received instructions not to conduct a comprehensive evaluation of claims. We were directed to tailor evaluations to fall within a range even if we identified additional covered damage. That was one of your employees that was a whistleblower. Another said there was an elaborate process designed to justify minimum payments to policyholders irrespective of the actual merits of the claim. Mr. Wright, this is completely unacceptable. $300 million of additional funds paid that would have been denied but for the pressure that was on your agency. You are charged with helping the very people that have suffered the most, and my constituents got cheated, and so did others across New Jersey and across New York, and you have to fix that. You have to fix that process so that people at least are getting paid what they are owed, and it doesn't create a gap that keeps them out of their home for years after these events. I yield back.
The gentleman's time has expired. The chair now recognizes the former chair of this subcommittee and the current chair of the Financial Institutions Subcommittee, the gentleman from Missouri, Mr. Lutemeyer, for 5 minutes.
Thank you, Mr. Chairman. And Mr. Wright, good to see you again.
Yes, sir. Likewise.
I know that a number of the things that we've discussed today were happening and were consequential prior to your taking over. And I know that in working with you over the last couple of years here, you have done a pretty good job under your leadership of improving claims process. As my colleague next to me here has pointed out, there were a lot of mistakes made. And I know that the last 2 storms we had this last summer, this past year, there were not that many mistakes made, as many mistakes, put it that way. I know that as chairman, we wound up with a lot fewer complaints, and so I congratulate you on improving the process. Always room for improvement, of course, but
agreed.
I think that you've also improving the process, going to advance payments has been a big help. And so I think one of the things we have one of the things that's in our bill, in fact, is taking some of those improvements and trying to put them into statute. So we thank you for that. Obviously, one of the things that's under a big concern to my colleagues and myself is the reinsurance, trying to find a way to take the taxpayers off the hook. Can you tell me what the size of the 2 losses were last year? What was the size of the 2 events?
So my overall, the total loss last year was about 4.2 billion. The largest was 2.5. The Louisiana one alone was 2.4 billion.
2.4 and 1.6. Okay. So if we would have had reinsurance and would have kicked in at the $1 billion level, we would have had $2 billion worth of reinsurance, and you wouldn't have had to increase the debt from 23 to 24.6, right?
So
yes, I mean that I can do the math, Mr. Wright.
you can. So I learned quite a bit when I went to the markets at the end of last year on the price points. And the attachment that we bought at $4 billion was the place where the optimization of the pricing began to kick in. Pricing below a $4 billion attachment.
With all due respect, Mr. Wright, the pricing of this is obviously important, but at the end of the day, what you're talking about is the flood insurance program and having the taxpayers be the backstop. Right now, the taxpayers are the reinsurers of the NFIP program. And the program is not structurally sound, it's not actuarially sound, it's not, because obviously we've got a loss of $24.6 billion sitting there. And if we would have had reinsurance in place that would have kicked in at the $1 billion level this past year, we wouldn't have added another $1.6 billion to our debt.
That is true.
And so I think the reinsurance, to me, is the most important thing we can do, because it takes the taxpayers off the hook and finally begin to go down the road of getting this program under control. And from there, then we can start working on getting the actuarial rates more sound and work on things like that. With regards to the data, I want to go quickly with that. I know that there was a couple questions with regards to the data collection. What kind of information, when you have a policy, what information, personal data, is collected on a policyholder when you do your application? Name, address, birth date, social security number.
We do not take social security numbers any longer, but name, address, birth date, value of structures, and ultimately we end up with loss history attached to
Okay,
that.
so when you gave the loss history to the reinsurance folks, all of this data that name, address, personal data got given over to them?
I created a derivative product based on zip code that was sufficient for them to provide me pricing.
Okay, so you didn't give individual
They knew exactly
addresses?
they knew exactly how many claims, the value of each of those claims, but they were generalized at the zip code level. They didn't get the street address. And that
They didn't
was
get street address, didn't get names, so the data of those people was protected.
correct.
Okay. With regards to
And those are the data, sir, that I have recently released on FEMA's website that are now downloadable.
Right. To me, the mapping is another very important part of this. My information shows that last year you had 25,000 letters of map amendment called LOMA letters at a cost of $13 million. Is that accurate, close to it?
Those numbers seem correct to me.
Okay, so we got the maps that are off. 25,000 people around this country had to spend anywhere from $300 to $500, $700 to get themselves out of the program and show that they didn't need to have that coverage. And one of the things that I think is important is can you get the maps corrected every year?
I'm constrained by the number of resources that I have to spend on those maps.
And the reason I ask the question is, how often do you get to being able to remap?
So I'm required by statute to evaluate them at least every 5 years, and then resource dependent drives the amount of investment that I can make.
Are we lucky to do it every 10 years?
In most areas.
I see you're smiling, so I'm not too far off.
So so in the risky areas, and part of me starts, and I need to be careful given the rural nature of some parts of the country, the riskier the area, the more policies I have there. I am basically on a 5 to 6 year cycle. In other cases, it may be closer to 10 years before they have an update.
So my comment would be this, is that one of the things we're looking at trying to do is go to at least every 3 years. If you're not able to go back and redo this, allow the local folks, if they adhere to a certain criteria, to be able to do their own maps and then have them approved. Is that acceptable to you?
And it's acceptable under today's authorities as they exist today. I will take data from a community at any time for a map revision.
I'm being timed out. I appreciate the indulgence by the chairman. Thank you very much, Mr. Wright.
Gentleman's time has expired. The chair now recognizes the gentleman from Illinois, Mr. Mulder, for 5 minutes.
Thank you, Mr. Chairman. Thanks for being here. My district is suburbs of Chicago, and the Fox River cuts directly through the center of my district. It's bordered by towns and cities like Fox Lake, Crystal Lake, Elgin, St. Charles, Oswego, Yorkville, Plano, not to mention the lakes in the northern part of my district. I believe we should maintain affordable access to flood insurance, but we also must be fiscally responsible. I think that's been a common theme today. First question, is it true that FEMA is no longer able to even make interest payments on its debt? Yes or no?
In January, I borrowed the resources necessary to make the interest payment for March.
When will FEMA technically default on this obligation, or have they done so already?
I would not use that word in relationship to this program. There are people who have purchased those Treasury bills, and they have the full faith and credit of the United States behind them.
I'm still very concerned with delays of payment and failure. Well, we'll see question marks on how that debt will continue to be paid. Concerned, certainly, I think all of us are, with the amount of debt NFIP has accumulated. Certainly understand some risk in providing insurance, but there's also an expectation that it should be properly managed, whether it's provided by the public sector or the private sector. However, in the case of the public sector, as we say, taxpayers are left holding the bag. Your testimony states that a quick succession in severe storms as the primary cause for the NFIP being about $25 billion in debt. Your testimony states that conservatively, Hurricane Katrina has a 2% chance of occurring in a given year, Hurricane Sandy 5%, and the August 2016 storm in Louisiana 4%. Combined, the chance of all three happening is extremely low, less than 0.1%. Do you believe FEMA was doing a poor job of accounting for the risk, or do you believe they were collecting insufficient premiums to account for this risk?
We were collecting the premiums generally allowable under the statute. So nearly 80% of my book is actuarially sound. The other 20% of it has statutorily directed discounts and subsidies that I live within.
What changes should FEMA make to avoid ever accruing this much debt again? Do any of these policies require action by Congress to make sure that the debt never gets to this point?
Absolutely, sir. So when I talk about a sound financial framework and bringing transparency, we need Congress on that front. We can look at the amount of premium and maybe make adjustments in that. We can look at the kind of what is repayable debt, simple liquidity that I might need in any given year, the use of reinsurance, which we have a cornerstone and will continue to build. But there are tipping points based on events by which only Congress will be able to help me solve those.
I want to get into a specific circumstance in my district. I mentioned St. Charles, this city in my district that had significant amount of trouble working with your agency last year to update the flood maps along 7th Avenue Creek. There's been significant flooding here in recent years, so the city of St. Charles would like to undertake development projects to manage the flood risk in this area, which has a number of businesses and homes. The problem is FEMA took an agonizingly long time to update the maps, which caused significant uncertainty for the community. It's now been resolved finally, but I want to know what steps FEMA plans to take to prevent this from happening to other communities in Illinois and around the country, this unacceptable delay.
So first of all, I apologize for the delay. We need to be efficiently taking the data that communities give us and processing it, make sure it meets the standards. I think as we look at the breadth of the mapping programs, one of the improvements we're doing on our technical side is bringing far more visibility. There's nearly 1,400 projects going on across the country and ways by which we can see things that are falling behind. I want to particularly find ways to understand where is there an expectation from the community, particularly, which is, I believe, the instance that you're highlighting. The community made the investment in the mapping update. Those need to go to the front of the line and get processed.
That's what's so frustrating is they feel like they've done everything they're supposed to do and their hands are tied waiting on bureaucracy that just is unacceptable. Just wrapping up, I've got less than a minute. As you noted in your testimony, FEMA removed the NFIP's financial assistance subsidy arrangement with the Write Your Own companies from regulation. You might remember that Chairman Luke DeMeyer, Ranking Member Cleaver, and I wrote you a letter last year expressing some concerns about this decreasing accountability to the public. Your testimony also states, and I quote, this process was time-consuming and created a delay to make any administrative updates or changes in regulation. Now the process is streamlined to improve the ability of FEMA and its industry partners to negotiate operational adjustments and corrections more quickly and efficiently, end quote. I agree it's important that we remove red tape and provide some flexibility, but operationally, won't Write Your Own partners be subject to program changes with potentially little or no notice? And how do you plan to transparently communicate such changes to these companies that, again, are just trying to abide by the rules of the program?
So I do think that removing the red tape was essential. The contract with the companies had been codified into regulation and hadn't been changed in 17 years. The commitment we made going into this process is that any changes will be publicized at least 6 months in advance. I anticipate later this month publishing the arrangement that will be in effect October 1st, so more than 6 months' notice if a company wanted to make a different business decision related to those pieces. And we are consulting, and so we put out a series of principles. I've tried to be transparent with the public as well as with the companies about where we're going while eliminating the red tape. But there's a firm commitment and, frankly, a standard in the regulation now. I cannot simply make the decision by fiat on my own.
My time's expired. I yield back. Thanks, Chairman.
The gentleman's time has expired. The chair now recognizes the chair of the Foreign Affairs Committee and a long-term member of this committee, the gentleman from California, Mr. Royce, for 5 minutes.
Thank you, Mr. Chairman, very much. I wanted to ask Mr. Wright a question, sort of a follow-up on the chairman's question concerning repetitive lost properties.
Right.
And I actually have bipartisan legislation with Mr. Blumenauer from Oregon on this. And one of the things we seek to do here is empower communities to tackle this problem. We'd like to work with you on that legislation. But the precise numbers change from time to time. The bottom line seems to be that a small fraction of policies, and let's say it's roughly 1% of policies, seem to account for 20 to 30% of the claims and losses. In 2009, the Department of Homeland Security's Inspector General said that an increase in new repetitive loss properties was outpacing what we were attempting to do in terms of mitigation by a factor of 10 to 1. Now, that's a troubling number. And have our mitigation programs to begin to catch up? Have the numbers turned lately, or does it look like we're still growing the number of repeat loss properties, arithmetically here? And can you provide the committee with the most up-to-date data on that?
So I can get back to the committee the specifics on the data, and I look forward to the opportunity to collaborate with you all as you look at potential legislation. The number continues to rise.
Okay, and then the other point I would make is just taking FEMA's current guidance document on the community rating system as it relates to potential homeowners, and I think it's pretty cogent here. Most prospective buyers do not take the time, nor do they know how, to investigate whether a property is subject to a hazard. In many cases, a property may not be near a shoreline or a stream. Past flooding may have been minor, or there may be no history of flooding since the area was developed. As a result, many people are caught by surprise when the properties are flooded. One of the best times to advise someone of a flood hazard is when he or she is considering the purchase of that property.
Agreed.
So as I understand it, FEMA gives credit to communities that are able to work with local realtors and the community to push this sort of pre-closing flood disclosure.
We do, and we'd offer discounts on the premiums as a result of those activities.
And I think that's helpful. But my question is, what more could FEMA do, or what more could Congress do to ensure that the American people aren't in the dark when it comes to flood history? And won't we improve take-up rates for flood insurance and strengthen individual and community mitigation if we better inform, communities and people about flood risks when they're looking at potential properties or developing potential properties?
So this is a conversation that I have a couple of times a year with the realtors who obviously become that forward-leaning part of this conversation. And we've had conversation with some of the private sector app developers that we all know well that provide data on the values of homes and what is for sale. I think greater disclosure about the risks on the front side are very helpful. Some states require this, most states do not.
So there are steps that we could take that uniformly would assure that there was more knowledge.
I think we'd have to look at the implementation.
More mitigation, presumably.
Yeah, I'd want them available. I think when we push that out, we have to look at the implementation side of that. Yes. I don't have a relationship with every realtor in the United States, and so I couldn't be the enforcement mechanism.
No, I understand that. But as we look at what different states are doing,
agreed,
we can get a feedback in terms of what seems efficient, what seems easy, and what is effective in getting to this.
And I think there's some things to be learned from your state in California that does have some requirements related to earthquake risks, related to dam safety risks and the like. There's things that we can be learned from there.
Yeah, well, thank you. And again, Mr. Wright, I look forward to working with you on the Earl Blumenauer Ed Royce bill that we're moving.
I look forward to collaborating with you.
Appreciate it.
The gentleman yields back. The chair would now ask for unanimous consent to allow the chair and the ranking member to each ask one more round of questions for 5 minutes each, without objection. And I would guess we may not take that full 5 minutes. So with that, Mr. Wright, I got to get clarification from you, because in regard to the mandatory purchase properties and the take-up rate, okay? We asked you this very question, and your liaison responded to Congress and told us that you have no knowledge or data on this issue. We asked the OCC, and they said we don't have any data on this issue, okay? So you clearly have said, I can't advise you, Congress. We have no information. To which there's the slide that I've now put up a second time. The picture that comes at the top of this slide is a very nice picture of you, okay? Right there, great picture. And here, you're giving us different information. So I have a slide from FEMA, and I have letters from the NFIP and FEMA, and they are conflicting. Can you clarify that for me? Do we have data on the take-up rate on mandatory purchase properties, or do we not have data?
First of all, to the degree that my staff or I have not given you the clearest information, you have my apologies. What I can assert is I'm going to get you the best data and information that I have. I think that sometimes we get caught up on, is it data that FEMA collected or did FEMA access it? Frankly, that sets aside. You're after an outcome, I would imagine, Mr. Chairman, and you want to understand why we're not seeing a higher degree of take-up. I can collaborate with you on that. I know that the rates are different across the country.
Here's my concern, and I want to make sure we're very clear, because in the response from your liaisons, January 30th, 2017, to this very question, the response was FEMA does not have knowledge on the compliance rate for mandatory purchase properties, as the mandatory purchase provisions of the law are not under FEMA's purview, okay? That was the response, and so I then asked the OCC, and they gave me the same answer. But again, that's the email response, but again, the data that's provided in a FEMA document says you do have this information, and the take-up rate is about 50%. And if you don't know the answer today, I understand that, but we need an answer. Do you know or do you not know? And you have to clarify that for us. And for everybody else who says, we got a take-up rate of 50%, and we have a $24 billion debt, or we're $1.5 billion short a year, go for the people who are required to purchase but aren't.
You're referencing the 2014 report that we did commission,
right,
and asked for it to be collected. It is not data that we keep up to date. We don't have a tracking element for it. I'll make sure you have the best information that I have, Mr. Chairman, and I, like you, am committed to ensure that we has everyone participating who needs to.
I would just argue that if you don't have up-to-date data in your email response to me, you would say, I do have 2014 data that I can give you, but it's not current.
Sir, to the degree
that
that
I don't collect that data, that's different than then we find this slide deck that actually shows that this is what you're putting out there. That's my rub on how you've handled this.
Sir, to the degree that we were not clear in our transmission of this and the provision of it, I apologize, and we will make right by it.
I would argue that you're not clear when you have a slide deck giving one data from 2014 and then an email that says we don't collect data. So I'm pretty clear on what you've told me. And I think we got to work through how we get on the same page. I want to switch quickly. Again, $24.6 billion in debt. On average, we would say, we bring in $3.5 billion in revenue, but the cost of the program on average is $5 billion. We run a $1.5 billion deficit a year in the NFIP, and we are paying 31% in compensation for the Write Your Owns. Now, I'm not passing judgment on that, but is it fair to say that that's almost $1 billion in compensation for the Write Your Owns?
You're right on the amount of compensation. The right your owns retain a portion of that. And so first of all, I will tell you, I want the price of operating this program to go down. I want it to go down across the board, whether that's on my side of the books or what the companies are ultimately doing. When you look inside that, half of that compensation goes to insurance agents, the independent agents that are small business owners across the country. And we can begin to walk through those elements. Ultimately, we need to pay the actual expenses, put the right incentives in place, and we need to drive down the cost.
So just to be clear, this is roughly close to $1 billion in compensation.
Yes, sir.
And we roughly run a $1.5 billion deficit a year. You'd agree with that number too, correct?
I would describe the deficit numbers differently, but I appreciate how you came to those numbers.
And again, there's no risk taken on by the right your owns.
There is none.
And did you see any disparity in, because we've had this conversation, and those who are involved in the program make this argument, well, but you go, listen, it takes a lot of work. It takes a lot of work to educate, home buyers on what the program is and what are up. I get that, but oftentimes you just have renewals year over year, and there's really no work in that, is there? I mean, pretty simple stuff. And we don't have any distinction between the first year the policy is written, where there might be a little bit of extra work, but also the renewals that take place year over year over year, and there's virtually no work.
There are standards of practice in the insurance industry in terms of how they work. That said, we need to drive down the cost. It is more work.
No, but answer my question. It's more, a renewal is pretty darn easy, right?
A renewal is usually easier than writing new policy. That is correct.
There are circumstances where it's not. Well, I suppose you can give you one if maps change.
Exactly. So when maps change or there's been a change in rates or surcharges, there can be conversations by which it would be more work.
And I know it's hard to compare apples to apples in this, but outside of the NFIP, when we look at commissions or compensation, I don't know that you're going to find the industry paying 31%.
So I can speak to that. I think that today, and we've been directed and we're working on the study to move away from this, but today we use the average of 5 lines, including fire, homeowners, allied, and that average comes together. And then today we pay an additional 1 basis point because of the complexity of the flood insurance program. So, homeowners sits at 27%, fire sits at 28%. Which shows me there's an opportunity to bring those prices down.
And I would just add that this is an important conversation we should have. It might be fair, it might be unfair, but this is a big part of the cost of the program, and I think it's important that we engage in a conversation, and your 31% may be right. And it may be a little too high.
So my position is clear. I do think we can bring those costs down. We need to look at them in terms of the right your owns. We need to look at it also in terms of the agents, and also the fact that 2.4% basis points of that go to state taxes to just flow back through to the states.
Absolutely, and we know the agents do great work in our communities making sure these programs and these policies get out. With that, my time is well over, and I now recognize the ranking member, Mr. Cleaver, for 5 minutes.
Thank you, Mr. Chairman. Mr. Wright, I just returned. I missed votes all week up in my district because we were hit by tornadoes.
Right.
In small towns you've never heard of, Oak Grove, Richmond. We had a tornado hit Oric, great vacation spot if you're looking for a place to visit this summer. But the problem is that, we have this threshold that you have to reach of $8 million in damage in order to get help. So we are unintentionally, but for sure, hurting small communities because Oric has 800 homes in the whole town. And if all of them had been destroyed, we still wouldn't have reached that threshold. The same thing happened in Richmond and Oak Grove. Population 77,000 in Oak Grove, 5,000 in Richmond. Do you think that is something that needs to be changed?
So, Mr. Cleaver, those standards are set in terms of how FEMA implements the Stafford Act. and there are per capita standards that are in place. I'm not the expert on those various thresholds, but I would be happy to get the right folks talking with you about them.
Okay. Because the people there think, we live in a small town, no matter what happens to us, we don't get help. But I would be happy to get that information because I'm going back up there Sunday, and I mean, people, they're just interested, well, why is it that we can't get help? I live in a small town, so, small town America gets kicked, and you have to live in an urban area before you get help from your own government. So I would be very, very interested in information. The other thing that I'm a little concerned about, it's tornado season, so I hope there are no more tornadoes in the country. That's a hope, but I don't think I'm going to be able to stop that with the hope. And so we're going to end up, before spring is over, having some more tornadoes. Hopefully they won't be devastating to the point where lives are lost, but they're going to happen. And so with that in mind, and with the OMB slashing or proposing to slash the FEMA budget by 11%, if that should happen, does that mean that my people in my small towns have less of a chance to get help?
Sir, I can't speak to the specifics of the budget that is still under formulation. What I will tell you is the Disaster Relief Fund is where we pay these expenses to communities, and we can walk you through more of those details when we show you the elements related to the standards for review on declarations.
All right. Thank you, Mr. Chairman.
The chair now recognizes that the gentleman from California has now arrived and would recognize him for 5 minutes.
Thank you. Yesterday it was reported in the Washington Post that the Trump administration may slash FEMA's budget in part to help find funds for other priorities. It was reported that homeowners may face a surcharge on their flood insurance policies, and I guess that would be to make up for the lost revenue. What would the impacts of these cuts have on your ability to properly administer the flood insurance program? Can you elaborate on the flood fee, and what kind of surcharge are we talking about?
Sir, I'm aware of the reporting that you're referencing. What I can tell you is, to the best of my knowledge, the final decisions related to the President's budget haven't been made. So it would be premature for me to speak about its specifics. I'd refer you to the Office of Management and Budget. Once that proposal is available, I would be happy to discuss how it would be implemented in our programs with you.
But obviously, if the budget is cut, homeowners will be paying more, correct?
So the related elements that are here deal with when are there fees that are in place and surcharges, and who bears the costs of those elements. Again, I don't know that I can speak to the specifics of that until I know what the proposal says.
Last Congress, the House passed the Flood Insurance Market Parity and Modernization Act unanimously. Although it did not receive a vote in the Senate, the bill had bipartisan support. As you'll recall, the bill clarified a provision in Biggert Waters 2012 allowing for private flood policies to meet mandatory purchase requirements of the flood insurance program. Because there's some confusion that remains for insurers and lenders, causing the market to be slow in responding, the FIPMA would clarify this provision. In addition to some suggestions for growing private insurance options, including the removal of the non-complete cause from the WYO arrangement and granting access to the NFIB's claimed loss data. What's your opinion of this proposal? Do you agree with the 419 members of the House who voted for it?
I believe that the bill has important elements in it, particularly as we bring clarity on to what satisfies comparable coverage. And I think that we look forward to working with the committee and its members on what that provision would look like in this new Congress.
What would the future of the NFIP look like if perhaps as many as 80% of current policyholders, those with moderate or low risk, are recruited away by the private flood carriers? What effect would that have?
So far more than, far less than 80% of our book of business is low or moderate. I do believe to the degree that the private market comes in, that would be an obvious place for them to start. So today, of my 5.1 million policies, 1.6 million of those are preferred risk policies. Given the assertion you've made, that might be a place where they would begin. I am convinced, and this was to the chairman's earlier point about there are far more structures that need to be insured. And so I'm convinced a mutual gain approach is the right way on here. And I think making space and encouraging the private markets is a helpful way to ensure that more people are covered for flood in this country.
You noted that FEMA wants to see flood insurance, private or public, increasing as we move forward. Could you explain some more on what steps Congress can take so more people are insured?
So I think there are some, particularly some programmatic and technical issues that are barriers for us giving folks the product that they want or need. It requires us to look at the coverage limits. It also requires us to look at things like basements and the like. Today, the statute mandates that I put the terms and conditions of the policy into the Code of Federal Regulations, which is a very cumbersome process. My agency is very slow to do rulemaking, and so making these changes, I think one of the elements I would assert to you is I still should go through notice and comment. I should still be very transparent about it, but the idea that I go through a full regulatory rulemaking to add a coverage for someone that they're willing to pay for at an actuarial rate, those are the kind of barriers that Congress could help us remove.
I'm hoping you'll propose statutory language so that we understand what we can do to be helpful and are very specific about that, and I yield back.
I'd be happy to work with you on that.
The gentleman yields back. The chair has spoken with the ranking member and would ask unanimous consent to allow the gentleman from New Jersey 5 additional minutes. Without objection, the gentleman is recognized for 5 minutes.
Well, thank you, Mr. Chairman and Ranking Member. I want to just follow up a little bit on what we talked about before. You, Mr. Wright, you and I have some things in common. I think you know I spent my business career in insurance, a business I love very much and I think can do an awful lot of good for people. And I noticed in my business life that as things got bigger, you have to manage them differently. And so when I had a small company, it was one thing. When I had thousands of people, it was very different. And often when you're trying to understand how things are going wrong, you only see the ripples at the top where the causation is really beneath the waterline. And it's not easy to get to the bottom of things sometimes. I'm trying to understand something you talked about a bit earlier. The write-your-owns had zero incentive to underpay claims. In fact, you might argue they had an incentive to pay them quickly because they don't make more money by creating a torturous process. And yet, claims got delayed, and there were some pretty egregious errors made, some of them apparently intentionally. You testified that the engineers and the adjusters would have no financial incentive to change a report, to say something was covered by flood, and then a few weeks later send it to the insured with a denial and say it wasn't covered. Are you aware of any action within either the NFIP or FEMA, more broadly, any action, either explicit or implicit, implied? Are you aware of anything that came out of NFIP or FEMA, either verbally or in writing, that would have suggested to various write-your-own companies, various engineers and adjusters, that you wanted them to reduce claim payments?
Sir, as you well know and we've discussed, it precedes me, but I've gone back and I've had the team looking at this question, and I have seen no evidence of that instruction being provided.
Does it strike you as just incongruous that this could have happened this way without somebody directing it?
So the best I've been able to understand as we've looked through this, 19,000 of these claims came back for reconsideration as we've moved through. And as you addressed, I was brought in to finish fixing this given the problems that were in place. A few things have been made clear to me, and I've spent a number of times with some of the files myself looking at them, including some of the ones with errors in them. What I saw was a system that was overwhelmed without the right controls in place. I saw a lot of sloppiness. That's inexcusable, and we have to have the controls in place to be able to see that and correct it. When you have a size event as large as this one, you're not going to play perfect ball, but we have to make sure that we do that. And so some of the changes I made, we changed the appeals process because when people didn't think they got a fair shake on it, they couldn't win through that appeals process. That's changed. The litigation oversight, the companies were fighting the wrong battles on this. But more fundamentally, I've got to get to the point by which we're not seeing changes made that are, except to improve the quality of the report.
That's what I will be looking for. And I don't doubt your motives and your good intentions about fixing it, but we have to see something different in the actual structure of NFIP the next time. Actually, I've only got a minute left, and I want to change gears for a moment. ICC coverage we've talked about a little bit today. And I just want to ask you, assuming actuarial adequacy, do you believe that increasing ICC limits and increasing the actual payment of ICC funds would result in avoidance of future losses?
It would help mitigate future losses. For me, the key is finding out how to do it where, today it's 30,000. Structures in your district largely are well in excess of $500,000. I know it's a diverse place, but there's high property values. There's other parts of the country where the property values are only $100,000. We've got to find the right way to tie that coverage or mini grant program to the structure in a way that understands it, and then come to an understanding, today we run a mini grant program that's helped to defray the cost of that increased cost of compliance. Are we trying to actually stand up something that provides you full coverage, at which point we should price it, and we should mirror some things that go in other peril lines? That's what I've been grappling with. It's not simple, and we got to do something that works in various geographic contexts.
I appreciate it. My time has expired, and I thank the chairman for his indulgence today.
The gentleman yields back. Mr. Wright, I want to thank you again for your testimony today. We appreciate it. It's a way to inform our members about the way you're thinking about these issues. Just as a notice to members of the subcommittee, we can expect another NFIP hearing next week to get the community perspective on this program. Both sides of the aisle have been working together on that. And so without objection, all members will have 5 legislative days within which to submit additional written questions to the chair, which will be forwarded to the witness. Mr. Wright, I'd ask you to respond to any of those questions in a prompt fashion as I'm not saying we're under the gun, but we're trying to move quickly as we have a looming
we will respond expeditiously.
I appreciate that, and with that commitment, this hearing is now adjourned.